the U.S. government banned them because it's a Chinese-made phone, and there was fear and or reasoning for spying. That they felt that they're spying, like there was two-way receivers on them, and they were banned for that reason. Like they're relaying information on from U.S. civilians back to China, and they banned it for that reason.
I don't know how big of a concern data privacy is for the general population. So I would love if you guys listening now could shoot us a comment and let us know from a scale of 1 to 10, how concerned are you about data security and privacy? Because I don't know, everyone jokes about their FBI agent listening to their conversations, but
it's an FBI AI agent now. Welcome back, everyone,
to another week
of your favorite crypto podcast,
Sometimes Crypto,
the Unscripted
Crypto Podcast.
Hey yo.
Hey, yo.
It's been another week of Trump changing things the day after we say something.
And then again, before we even get to record, so it just changes multiple times. It's at this point, everyone is confused. No one knows exactly what's going on in the market because the guy who's kind of like making all the big decisions doesn't know what he's going to be doing either.
I think he wakes up, rolls a pair of DD dice, and decides what's going to happen after it.
He flips a coin to see if he reverses what he did or not, and then rolls a dice to see what the multiplying factor is.
Yeah,
the guy is all over the place with it, and other countries are kind of like just trying to figure out what to do themselves, while companies are kind of like just doing their own thing, kind of. Like, for example, Jamie Dimon, he's like, I don't care what's going on. You got to plan for the long term. All this stuff is like weather. It changes on the daily. And then companies like Micro and MetaPlanet keep on buying Bitcoin relentlessly. So find out what your strategy is, and long term, not short term. Don't time the market, and keep it going. Keep it going forward, I guess. But we got a lot of stuff to cover, I believe, or one topic to cover in depth.
We're catching up to the trends.
Well, I guess we are catching up to the trend in terms of like recording and sharing, just mostly because we record once a week while people do this full time and record every day, 2 times a day even. But it's crazy. It's kind of crazy what's going on.
I don't even know. Bring up what you wanted to bring up.
Yeah. So essentially, the right now everyone's kind of talking about the bond market, U.S. debt, and its relation to the Chinese tariffs, which I think William, you just told me that they raised it again. America raised tariffs on China.
Yeah, it was announced like 5 hours ago that the U.S. raised tariffs to 245%.
245% increase in tariffs from China. Okay.
From the U.S. On China.
On China, yeah. So like whatever is being imported from China is getting tariffed at that rate.
Correcto. Except for most electronic devices. Because those were exempt last week.
Yeah.
Or last weekend. Or the weekend. They were exempt already from the tariffs.
Yeah. You got to keep an eye out, though, because you never know. That might just be reversed. That might be reversed at any point.
Could be. I doubt he will, but could be.
Yeah, so it's funny because China also, and I say funny, but it's actually kind of concerning. China kind of limited its exports of rare earth minerals to the United States. I'm not sure if we mentioned that one last episode or not.
I don't think so.
I don't think we did. But and the reason why I say it's funny and kind of concerning is because one of our favorite games growing up was based off of that exact situation.
What game?
Black Ops 2.
Oh, it was?
Black Ops 2, the entire war that was going on was between the United States and China because China stops selling rare earth minerals to the United States.
I don't remember the campaign for this, but okay.
Also, mind you, Black Ops 2 took place in the year 2025, which is
You're right.
this year.
Just this year. So who had inside information on that, huh?
They probably had
Who
one
had
of the
ins-
animators from the. They had one of the animators from The Simpsons working on that team.
Oh, that explains a lot. That explains everything.
Well, I don't know if that's accurate. I was just making a joke.
Shh. Don't worry about that.
But yeah, essentially, tariffs are on the rise. The United States owes a lot of money to a lot of different countries, particularly two, with being Japan and China in that order, in terms of how much debt is owed to them. And there's a lot of speculation on what's the purpose of raising tariffs, what's the purpose of lowering interest rates, and how China and Japan can kind of affect what's going on within the U.S. or specifically the U.S. dollar.
Just to add, I've said on this podcast multiple times that he wants lower rates to refine the debt we owe that's coming up for maturity, which I found out recently it's $6 trillion.
Yeah, with about $1 trillion being to Japan, and since the last year, December 2024, it was $760 billion to China.
Well, I don't know if their specific ones are coming to maturity, but they are mixed in
But
the money.
ones in general. Yeah. I okay. Well, that's how much debt we owe to Japan and to China.
Yes.
So, mind you, this debt is in the form of bonds, where the U.S. Treasury issues out bonds with a fixed rate of return over 10 years, typically. And that's
There's
kind of
multiple,
what's going
right.
on. Yeah, there's multiple, but the one that's mostly being tracked right now is a 10-year bond.
Yeah, but there's a 2-year, 10-year, 20-year, 30-year. There's quite a few.
Mm-hmm. So, for those of you that are new to this channel or are not super familiar with how the Chinese economy works, it's essentially just an export-driven economy. They make most of their money from selling goods to the United States,
Or other countries.
or other countries. Specifically, the United States has been having a trade deficit with China since 1985, meaning that China sells more goods and services to the U.S. than the U.S. sells to China. So what goes on is that the Chinese exporters receive USD for their goods sold to the United States, but they need RMB, their local currency, the yuan also. It kind of goes by both names, to pay their workers and use the money locally. So essentially, they sell the dollars they receive through these exports to get RMB, which increases the US dollar supply and raises demand for the RMB locally. However, we have this bank in China, the Central Bank of China, which is called the People's Bank of China, which intervenes in this process of selling dollars for RMB to prevent an imbalance of USD and yuan. So it buys the US dollars that's from the exporters, from the companies in China, and gives them the yuan. This is kind of to just like stabilize the market over there, because with having U.S. dollars in the reserve for the People's Bank of China, the People's Bank of China can effectively print more yuan, and creates it kind of also creates a scarcity in the U.S. dollar since they have it in their reserve, increasing U.S. dollar rates. So I guess like the question is, why would they be doing this? Right? Question is, why are they keeping those dollars and printing out yuan? Essentially, it's to keep the yuan as a relatively cheaper currency, allowing China to keep its competitive advantage in the international markets. Because at some point there is a self-correcting mechanism. If the People's Bank of China wasn't buying the dollars back from these exporters, the yuan would gain strength, eventually making the cost of goods from China at some point should equal the value of the cost of goods if they were to be coming from the United States.
Mm-hmm.
Yeah. So essentially, the People's Bank of China has a large, mind you, they don't do this with just the United States. They do this for all foreign governments or foreign exchange reserves, foreign exchange currencies. They hold about $3.2 trillion in total since January this year.
How much? 2.3?
$3.2 trillion. $3.2 trillion in foreign exchange reserves.
Nice.
Yeah, but typically the U.S. has been seen as the safest haven for foreign reserves
US
for
dollar.
a while.
USD.
Yeah, U.S. dollars. Yeah, USD. Because of U.S. dollars variable exchange rate. Essentially, the U.S. government, the U.S. Reserve, can adjust its rates as needed to kind of keep a balance with the rest of the world. However, the concern, because China has so much currency, the concern is that they'll start selling off their U.S. dollars or their bonds, better said.
Which they have been selling slowly ever since early 2010s.
So, yeah, I think this is where me and William have slightly conflicting information.
This is where we have.
The information. Yeah, I found that China's been offloading their debt since 2018.
I found that they've been offloading debt since 2011.
Yeah. So slightly conflicting information. But it's kind of, I don't know. Nonetheless, they have been selling their bonds for a while.
Not in large numbers, but they have been decreasing the amount they hold.
Yeah. However, now with these tariffs being in place, the one of the biggest things that China has to its advantage is that they hold so much U.S. debt. If China were to start selling all this debt immediately, it would create a surplus of bonds available in the market, and it would not allow the U.S. government to lower interest rates because there's so much availability. There's so much rates available out there already.
You mean there'll be so much cash available, not rates, right?
Yeah. Yeah, sorry.
Okay.
Um. So. Um. pa- pa- pa. Yeah. So essentially, the offloaded U.S. reserves by China will either end up in another nation or it will return to the United States. Uh, and the repercussion for China if they were to do this might be pretty bad for China actually,
Mm-hmm.
because an excess supply of U.S. dollars would lead to a decline in the U.S. dollar rates, making the RMB more valuable, and in return, it would increase the cost of Chinese products, aside from the tariffs. But so increasing the price of the product plus the tariffs will definitely make their competitive advantage like non-existent, huge to a huge economic crisis in China. And they wouldn't be able to justify having so many workers when their products are so much more expensive now, and other countries will not be able to buy as much products anymore.
Mm-hmm. Interesting developments.
Yeah. Yeah, so I did find uh so you see here's another bit of conflicting information, I suppose, because I saw that the China's US treasury holdings peaked in between 2012 and 2016.
Mm-hmm.
So they had a valuation of over 1.3 trillion dollars, and as mentioned it's been decreasing. So they're currently at 759 billion.
Okay. Then maybe you're right. That's 2018, and then it decreased after that.
Yeah. Mind you, I found most of that information from Investopedia. And so as of late, there has been a sell-off in U.S. bonds overall. However, we don't know where it's coming from. To what extent? As in, is it coming from Japan or is it coming from China?
Or it could be coming from the entire bond market's being sold off.
Also that.
Because bond
And
prices.
part of that
Mm-hmm.
is because of the fact that the tariffs are, well, Trump's being super sporadic. It's like, oh, one day it's good, one day it's on, it's off. We drop them, we raise the rates for tariffs, and that's causing uncertainty in the market, and that uncertainty scares investors.
Well, that would cause the stock market to sell off, not necessarily the bond market. Bond market typically sells off when there's fear of inflation being higher than what the yield is paying currently.
Yeah, but
So
if they can't, but with the whole tariff thing, they won't know what the inflation is like at the global.
Yeah,
market, at the
what I'm
global
saying
level.
is not the tariff isn't the reason. It's not the it's the reason for the sickness, but not the symptom that they're worried about.
Yes, correct. That's
That's what I'm saying. While the stock market is directly affected by tariffs because it affects companies' profits and bottom lines.
Mm-hmm.
That's what I'm saying.
Yeah, I think right now the United States' biggest concern is that we can't produce anything for ourselves because the vast majority of things are imported, while services is mostly what's done here, which to a degree kind of makes sense for a while. Have a lot of the like intellectual property coming out of the United States, focus on growing companies, knowledge, and training individuals with better information, critical thinking degrees. But now the rest of the world is starting to catch up with that, as in the rest of the world is out of poverty. Like China's the majority of China's out of poverty now because of what we've done with them in terms of trading. It's been very mutually beneficial, as in the United States got a lot of cheap products, and a lot of people in China came out of poverty. Mind you, there's still a lot of people in China in poverty, but there's more people out of poverty now. So there should be more global advancements.
So I think it was the same guy who was on Andrew Schultz's podcast, Chad Smith. I can't pronounce his name.
Yeah,
the rich dude.
Mm-hmm.
So he was
he talked rich about Indian dude who continue.
Rich Indian Canadian dude and American
Canadian. Yeah,
but okay. it doesn't matter. He was talking about how also China has better skilled labor, better skilled workers in manufacturing versus what America has. That the reason we struggle in manufacturing, or at least chip manufacturing, all these things, is because we're just not as good as they are in those realms.
Yeah.
So that's also causing that separation. Yeah.
So like going back, like I guess in the history of all this, Ford's assembly line, that was the revolutionary part in the Industrial Revolution, essentially.
Correct.
Being able to mass produce products where there's specialized tasks and one person just specializes in that one tasks. It comes from the next person and they pass it on. That was the assembly lines advancements, right? America made a lot of money in that period, not strictly because of that, but that was part of it. And in outsourcing our production to China, they gained a lot of experience in producing products. So they know how to maximize their efficiency in production, which is something that America is completely like out of shape in.
You can also assume they also don't have the. You can also assume they don't have the amount of red tape to create those assembly lines.
And yeah, no, that's also very true. China had a lot less restrictions and still has a lot less restrictions than the United States. So now that China's so advanced in a lot of these manufacturing procedures, I suppose, operations, they've gotten really good with it and they've made a lot of money. And right now, America kind of suffers from a like national security point of view, where our supply chain is entirely dependent on what China sends us. And if China sends us faulty or malicious products, like we are 100% like the bearers of that.
At risk.
Yeah, we're the ones at risk. There's multiple examples that I could give. There's two primary ones that I think are the most important, or the ones that I think stand out the most and hits home to most people. It's medicine. A lot of medicine isn't even produced in the United States. There's a lot of things that are imported from China. So
the majority, it happened during COVID.
who's to say that they don't send us stuff that's not as strong as they say it is, like 50 milligrams. I don't know much about medicine. 200 milligrams of Tylenol, of ibuprofen, and it actually has 175 milligrams instead of the 200. So there's skimping us out there, or the alternative, they cut it with something else, and then it's ibuprofen, and it's not ibuprofen, it's something else.
To be fair, I do believe they would test this when it can.
There's checks, 100%. I'm not saying there aren't.
Before I fearmongers everyone here, there's a high possibility that everything is tested twice.
There's a lot of
once
checks
it's already brought in.
I'm just personally not informed on how these checks work, and this goes back to like kind of like the whole basis of like why I got into this podcast, which is fundamentals of crypto and Bitcoin, and it is do not trust, verify, and that's what I hope the United States is doing. However, I haven't verified that for myself either. So if we could just make it here, that kind of like removes one step.
That's
just my reasoning behind that. But yes, thank you for making sure I don't absolutely fearmonger everyone.
Yeah, this podcast would cause a huge panic. Podcasters say China's skimping us and adding fentanyl into our pharmaceuticals.
And then like kind of like the other one is our technology. A lot of our technology comes from China. So who's to say that they're not making alterations to certain chips and certain products that makes their way to facilities or the people in general, and it takes advantage of. And
they do make their
happening.
No, well, they do make their way into those facilities. They do.
Well, they do. Okay, yes, they do make their ways, but I'm saying the ones specifically with vulnerabilities or exploits that is meant for the Chinese government to take advantage of.
On this one, I'm going to lean on your end. I do think they're already infiltrated.
So this is something not confirmed, but high probability, and this is something that needs to be checked or corrected at the very, like, one of those two things, mitigated to some degree.
Well, this is part of the reason Huawei phones were banned from being sold in the U.S.
Mm-hmm.
Because
they were banned from the.
Dude, what?
I didn't know. I don't remember them being banned. I do remember having one, like, at one point, but
oh my god,
I remember them being banned.
Yes, they were banned 2017, 2016 maybe. The U.S. government banned them because it's a Chinese-made phone, and there was fear and or reasoning for spying. That they felt they're spying, like there was two-way receivers on them, and they were banned for that reason. Like they're relaying information on from U.S. Civilians back to China, and they banned it for that reason.
I don't know how big of a concern data privacy is for the general population. So I would love if you guys listening now could shoot us a comment and let us know from a scale of 1 to 10, how concerned are you about data security and privacy? Because I don't know, everyone jokes about their FBI agent listening to their conversations, but that could be a thing.
It's an FBI AI agent now.
Yeah. They fired the FBI agents that were listening to
it. They're not needed. They're just like, we're listening for specific words. That's not necessary.
Yeah. So that kind of brings me back to one of the things I wanted to address, and I completely forgot about, with the whole manufacturing and things in China. And tariffs going up, all this talk. One of the purposes of trying to fix our current trade deals with China is to bring manufacturing into the United States. However, it is extremely critical and this is kind of like a personal perspective on this, which I might be agreed on by other people, but a very critical thing to
Can't wait to
keep
disagree.
note. One of the critical things to keep note is that the manufacturing jobs that come to the United States will actually not be done by people, but automated machines, i.e. robots that are non-humanoid.
That's arguable.
Because
People have been saying that, by the way.
I think that's honestly, like, this might be a hot take. But some people might not like that because they're like, oh, robots are going to take all of our jobs. But in reality, robots could do your jobs for way cheaper than the Chinese people can, like the Chinese citizens. Let me be more formal about that. That seemed a little insensitive.
You're gonna get
seemed a little
canceled.
insensitive. I mean all due respect, right? Robots can do jobs way cheaper than any person can. However, these robots are going to need maintenance, development, and like infrastructure to be set up for this. So a lot of the jobs that I think will be created in the United States would just be setting up these insane industrial operations where where all these products are made almost completely entirely autonomously, if not 100%, which it should be 100%.
Giving you pushback, I don't think it's gonna happen.
I don't think. Well, it's not going to happen within the next 25 years. But
but these jobs are going to be created before 20. These jobs will probably be created before 25 years.
Yeah. So the jobs will be created within these next 25 years, and then hopefully, like, that's kind of where we are 25 years from now, 25 to 30, 40, whatever, where everything is just assembly line, 100% automated. You throw in a bunch of scrap parts, raw materials into the system, you get a fully functioning rocket out on the other end.
Maybe. But not in the foreseeable future. So the manufacturing jobs that will be created in the next 5 to 10 years will be human-based. Or at least half of it. I will say half.
To a degree, yeah. To a degree. So that's really the only, like, advantage or, like, objective that I think is on the market. However, going back to that whole rare earth mineral thing, another reference of what we talked about earlier in the episode. A lot of these machines that would be what we're trying to set up for automation will require rare earth minerals, where China is the majority of where these rare earth minerals are located. So if we can't get these rare earth minerals, we cannot set up these automations.
So to preface, it's not that they're located within China, is that China is in control of the majority of those mines in where we mine rare earth minerals.
They're not located in China? Are those mines not located in China?
No, they're located in Africa. In the Congo, the majority. Not specifically in China.
Okay. I was not aware.
China's... Yeah. Well, I mean, I'm not going to say there's not, like, some or not a good amount, but I'm just saying they're not...
China's big.
Yeah, I'm not arguing that. I'm just saying they're not all located within China. They're just in control of the majority of mines.
I see. Well, the issue stands. If China doesn't sell us rare earth minerals, then we will not be able to build.
You buy from somewhere else.
But if China owns the majority, then you're buying it for way more expensive.
No, Jesus. They own the majority of them in the Congo, in Africa, in parts of Southeast Asia, not of the world.
I'm pretty sure it's of the world is what they like. The majority of the world's rare earth minerals are owned and controlled by China.
I don't think so. I won't say that. I'll just say they're probably the bigger manufacturers of it because they can do it for cheaper, or they already have more manpower.
That's also probably part of it. That's definitely a factor that should be accounted into.
What was the question you said? What was it?
The China's. How did I phrase that? How was that phrased?
I got it.
China owns. Yeah. It's funny. I was having a conversation with my dad, and we were trying to figure out a specific question to like search up on Google, and I was like wording it one way, and then he's like, "I think it should be worded this way," and I was like, "Yeah, I think that way makes more sense." I kind of forgot right now what's the proper way of wording the question.
I just put the word does.
That's all you put?
Yeah.
Does, and then Google already gave you what you're trying to.
Yeah, because does makes it a question.
Oh. I thought you meant like the only word you put in was does, and it automatically
no. Does for the.
Yeah.
So production as of 2023, China accounted for over 69% of global rare earth mineral mine production. Processing, China processes nearly 90% of the world's rare earth elements, giving it a substantial control. China possesses approximately 44 million metric tons of rare earth oxide equivalent, making it the country with the largest reserve. Other countries with significant.
So it has the highest reserve and the most production.
Well, if anything, I'll say it has the most processing. It only has about 70% of the production.
But it's 70% of the production, but it also has the highest reserve. They own that market, William. That's what that's saying.
Did I disagree with you? I didn't. I just said you can buy somewhere else.
Yes, you did say that you could buy somewhere else. You did say that.
I didn't disagree with you. I said
you made it seem like it was going to be easy.
No, you just start mining it yourself. They only own it because someone else doesn't do it.
If they own the majority of the reserve.
Okay, the reserve meaning they own it, they have it already. Not that they own that they own the land that's on.
Oh, that's how I interpreted that.
I interpreted the opposite.
They own the land that it's on. It's like America's oil reserves is all in the dirt. Like it's not actually hasn't been.
No, our oil reserve is not the dirt, my friend.
It's an actual reserve that we have.
It's an actual reserve of oil.
I don't know. I interpret a reserve as in like we got it there. We just gotta pull it out.
No, that's not a reserve.
No, that's what would that be called?
What?
The processing? What's in the ground, not in a reserve.
Raw material.
Raw?
It's raw material.
Okay.
At least that's what I would call it. Raw material.
No. I think you're right on that. For some reason I just like, oh, it's in the ground, it's there. It's good. So what do you still have those numbers up? Can you say them one more time?
69% of rare earth mining production, 90% of processing, and 44 million metric tons of reserves.
Okay. Yeah. Okay.
You know what?
That's pretty significant.
I'm not saying
69% of raw material production. That's the majority.
Correct.
70% of.
No, yeah, that's bad.
It's pretty wild.
But this is just because we let them.
I guess that might actually have been a competitive thing that they did well on. They're like, you know what? These people are gonna need these rare earth minerals. Let's buy up the land let's set up operations, start producing it. That was a financially savvy business investor's idea.
So I'm going to reiterate. I was wrong. Reserves is in the ground.
Oh.
If it would have said strategic reserve, government stockpile, or process rare earth, it would mean it's in a thing. Like it's bunkered up.
Yeah. Strategic reserve is bunkered off like...
Yeah. Reserve is in the ground.
Yeah, you see, they own... Well, what was it, 70% of a reserve, of the reserves?
No, they don't own anything of reserve. They just own, they have 44 million metric tons in a reserve. Like they have it. It doesn't equate. Because Brazil has half of that.
Okay.
Like they have.
All right, looks like Brazil might be getting a lot of business then. China stopped selling to the U.S. U.S. still needs. So Brazil's sitting nice and pretty. Brazil's sitting nice and pretty. Speaking about Brazil, there is a proposition for a Bitcoin strategy that for I think it's a company.
Are we done with China for right now? I just want to clarify before we move on. Are we done with China?
Okay, you're right. You're right. I shouldn't jump off if we're not done. I think I covered everything I had to say about China.
Yeah. You didn't even touch. I love how he goes. We're talking about the bond markets. Doesn't even talk about the bond markets. He just talks about China and what.
Well, I talked
and
about
they own bonds.
The bonds and how it affects the U.S. market. Okay, William. How's the bond market looking? William likes looking at the numbers. I like looking at.
No, I'm not talking about the bond market itself. I'm saying what you just talked about bonds and that they're being sold, and that's it. It's like, well, okay, what do bonds affect? What do they?
I did talk about.
Is it bad?
Okay, so what I'm getting out of this is that you completely zoned out of everything I said for the last 30 minutes.
It's 45 minutes.
I know, but it was 30 minutes I was talking about all that.
I'm kidding.
The last 15 minutes we were talking about them.
No, I'm kidding.
Okay, William. So what did I miss out? What did I miss out?
I just wanted to give you a heart attack.
So, well, what information do you want?
Nah, I said I was kidding, dude. I said I was kidding. Relax.
What
bro.
do you think? Okay. What's the bond rates looking at right now?
I don't know. I don't look at the bond market. I just know they're up and they should be going down.
That is true. That is true.
So
the rates are up. Okay, so I think this is a good time to make a distinction. Bond rates are up, which means that it's cheaper to buy the bonds. So bonds have fixed rates for the duration of their time. A bond could be for 10 years, let's say. And it could earn, like, let's say $50 a year on $1,000 bond, on $1,000 investment. What does that come out to be? 5%?
That's 5%.
Yeah, 5%. If someone were to sell their bond for less than $1,000 to someone else, the bond will still return $50 per year, but they got that bond for less than $1,000. I don't know a square number to put that into, but like, let's say it's less. So that 50%, I mean that $50, but that 5% is now going to go up because they got it for cheaper than $1,000. So that's bond rates are up, and we want bond rates to go down. So bonds should be more expensive. Instead of someone selling their $1,000 investment into the bond for less than $1,000, we want them to sell them for more than $1,000.
Correct.
Clear and concise?
Correct. And bonds are currently... the 10-year bond is at 4.34%.
Okay.
Which is quite up from April 3rd. April 3rd was 3.85%.
Oh, wow. Yeah, that's significant.
Yeah, and Trump wants these rates to go down so we can as we've mentioned multiple times, refinance our debt. So we don't have to go into more debt to pay off the debt.
Wild.
Wild. And while we're still on rates and all this, Jerome Powell will be speaking later today. Today is Wednesday, April 16th.
April 16th, Wednesday. Yes.
So I assume he announces if we have rate cuts or not.
I think
or is that tomorrow? Or we haven't done it this month.
I don't think he does it every month.
There's a meeting every month.
There's a meeting every month. We're gonna get a clue on whether he thinks rate cuts are gonna go up or down, but I don't think he's gonna announce. I'll take a little quick Google search. Nonetheless, Jerome Powell is talking today, so yeah, you'll definitely have noticed that the market has fluctuated on Wednesday. What you searching?
When do they decide rate cuts?
Oh. Cuando le dé la gana.
You are correct, sir. May 6th and May 7th is when it's decided. That's the FOMC meeting.
Next month.
Correct. The beginning of next month.
Yeah, very beginning.
He's just going to speak
2.5 weeks away.
2.5 weeks away.
Exciting, terrifying. It's one of those two. It's definitely one of those two because the entire market's on the fence.
No one knows what to do.
Well, that's not true, William. That's not true. Some people know what to do. Specifically,
I mean, you know who played it right? I know who you know. I know you know the GOAT.
The GOAT. There's two GOATs right now.
Well, who's the second?
But you're talking about the. Well, I guess there can't be two GOATs.
Unless one GOAT's bigger than the other.
Yeah, well, which is why in this case there's only one GOAT.
The Big Daddy GOAT.
Yeah. Sir Michael Saylor himself.
I'll say Warren Buffett.
I was thinking Michael Saylor.
We had different GOATs
pages right now. Apparently,
we had different GOATs. We had two different GOATs.
What's up with Warren Buffett?
He is sitting on like $320 billion stockpile. I mean cash pile.
Cash.
Because he sold off he shrank down a lot of investments as Trump was coming in with tariff talks.
Yeah.
And he's waiting to buy the dip.
Mm-hmm.
That was the good I was talking about.
Yeah, I was talking about Michael Saylor and MetaPlanet.
Oh. Those are little goats to me. Compared to the big goat.
For now, probably. For now. But essentially, they keep on buying Bitcoin left and right like there's no tomorrow.
Listen, if they don't stop by and hold some cash and for when the dips, if it keeps on dipping, I don't know. They might need to sell before that.
Their DCA is probably pretty good. Where the heck did I have
MicroStrategy
how
announced
much?
this week that they bought like another 250 million worth of Bitcoin.
250 million.
Yeah,
They got a lot of
Like,
money.
they bought 3,000 coins. I think 3,000 like something coins.
Yeah. Where the heck is it? I'm looking for my number. Here it is. So MetaPlanet added 319 Bitcoin recently.
I wish I could add 300
And now
Bitcoin.
I wish I could add one Bitcoin.
This is fair.
I'll be happy with. So MetaPlanet is now the 10th biggest Bitcoin holder, sitting at 4,525 Bitcoin holding. Aggregated cost basis of 408.1 million, at an average acquisition price of $90,194, which I believe is more expensive than what Bitcoin's currently at, right?
Was he price?
Yes.
I'm sorry. You said 90?
90,000.
They bought high.
Yeah.
They're down.
High.
They're in the red.
Their recent purchase of 319 Bitcoin had an average price of $83,147. So that kind of brought down their average cost.
They bought the top. I feel their pain.
Yeah. Well, they did start a Bitcoin Treasury operation strategy in December.
Mm-hmm.
And so it's a new strategy, and they did start it pretty high.
They bought the
and
top.
What they're doing is, what they're doing is they're evaluating their performance through their Bitcoin yield, relative to their outstanding share. Yeah, it's a long-term strategy that they got. And then also, if I could find the information somewhere that gets lost in everything, the amount of Bitcoin whales has gone up also.
Nice. Damn.
Should I be able to find the chart somewhere? I think it just surpassed 2,000 Bitcoin whales who have wallets where they're 1,000 to 10,000 Bitcoin.
Jesus.
Yeah, that's significant amount of Bitcoin. Yeah, I'm trying to find the exact number, but yeah, it was like about 100 new wallets that are considered whales.
Damn. Meaning they have over than
1,000 Bitcoin in one wallet address.
That's a pretty penny.
That is a pretty penny indeed. Yeah, I can't find it. I don't know where it's at. It's wild. Anything new? Anything else?
Not really. Well, Bitcoin might be finally breaking out of its downtrend, because we've been going down since we peaked back in early January, about late January, about 109, and we've been on a downtrend ever since then. And we just broke out of that again. We just official again now. So we could hopefully maybe start to see a push up back to the mid to high 90s. But in this market, nothing's guaranteed. Trump throws a tariff out every other day.
So, now that you mentioned that, there is speculation at this point. It's just
that we're in a bear market.
No, that's not what I was gonna say. Because I just don't know the guy's name. Someone who's part of the like government's crypto task force, or
David Saar,
the group that might be him. Where he's in talks.
He's crypto Saar. His name's David.
Crypto. Okay, I see. Where the talks are about getting what's it called? Part of tariff revenue as a form of increasing America's strategic Bitcoin reserve.
I'll take it. It was crypto was easier when governments weren't involved.
Crypto was easier when governments weren't involved.
When governments and companies weren't involved, it was easier to play.
So it wasn't the David guy. This is the executive director of digital assets. His name is Bo Hines.
Oh,
yeah. Using tariff revenue to buy Bitcoin for the reserve, which honestly is a way better strategy than just issuing out more debt and buying Bitcoin, because that would absolutely wreck the dollar and hurt United States a relationship with other countries. So this, I think, is a much more reasonable, friendly, less violent, and agitating way of accumulating good, sound money, Bitcoin.
This is accurate. Facts. Can't disagree with your facts, bro.
Lovely to hear it. Love to hear it.
Can't disagree with you. I would love to argue.
Lie, though, it's kind of entertaining when you argue it. It's more entertaining and makes me think more. But sometimes it'd be that way.
Well, everyone on X is saying we're in a bear market.
Of course, bear market, recession,
and Jamie Dimon and Larry Fink says we're heading towards a recession, if not already in one.
Yeah. Yeah. Well, my thing is, if the goal is to lower interest rates, and they're not going down, and they're not working right now, I don't think right now is the right time to buy a house, because if interest rates go down, we could maybe buy a house later on.
It's not working.
I say we, but I mean like the peoples.
The people want to buy a house.
The people's like buying houses. Oh, do you know who David Ramsey is?
Yeah, I know who David Ramsey is.
The guy, he talks about investments and saving for people who are not super good with money.
And don't use credit cards, don't use debt, but pay everything in cash.
Yeah, so like that. And this is a case for everyone. There's good takes and there's bad takes. It happens to me all the time. Happens to William. Happens to literally everyone. And Ramsey's one of those people. Also, because it happens to everyone, right? Everyone falls in that group. And he was he had a guest talk on the show, like phone call in. Talking about how his monthly mortgage is $2,000.
Okay.
And his monthly bring home pay is about like $4,100.
Oh, okay. Damn.
That's significant, right? Like,
yeah.
Ratio wise, that's half of
ratio wise
mortgage.
It's half of his. Yeah.
Yeah. And the guy was like saying, Or Ramsey's like, that's insane. That's over half of your income. That is way too expensive. Like, not gonna happen. Like, you should look at selling that property if your mortgage is that high compared to your income. And personally, like, it looked like $2,000 mortgage is kind of a fucking steal. Sorry for cursing. I don't know. I don't know where this guy's
did he
located
say?
at.
Did,
I don't know.
did
the
he
state
say
of
how
the
big the
property.
house is?
I didn't see that. It wasn't part of the clip that I saw, which is what I'm referring to now. Is like there's some information that I'm just not fully aware of, but a $2,000 mortgage I think is not crazy. Might be
Well,
good,
ratio wise,
depending on the state of the house. Yeah, ratio wise for his income is intense. But if you have a mortgage at $2,000, like that's not bad currently based off of, and again, information that I did not see in the video, which might be crucial, but I felt like that was kind of a crazy take.
Well, the thing, okay, so Dave's take would have been completely, from what I've seen of him, it would have been sell that house, find an apartment below 2,000,
30%.
closer to 1,500.
Mm-hmm. Yeah, so
closer to 1,500 to 1,000.
So with him, this is a question that I had asked someone the other day, and I never got an answer. I guess they didn't hear me ask the question. The typical budget that people like have is your housing should be about 30% of your income, no more than that. If it's more than that, you're kind of over budget. Now, what is the correct way to budget for a car? It's like how much should the value of the car be compared to your income, like relative
I think it's less than 30%. I think like 10% or less.
Yeah, it should definitely less than 30%. I would assume it's like if you make the value of the car in a year, it should be okay. Like car's worth $45,000 a year.
You make 45 for
then the car should be okay to buy. Granted, interest makes a big change on that, like monthly payments, stuff like that. But that was like the rule that I kind of remember, and I don't know how accurate that is because I feel like it's still too vague of a number.
Let's see. I don't know. So a car should be, a general guideline is to spend no more than 20% of your monthly income on a car-related expense, including loan payment, insurance, and fuel.
Okay.
Aim for your car payment to be around 10 to 15.
10 to 15%. Okay. Yeah. Numbers.
I said 10.
Yeah, no, that makes more sense. Yeah, that's a way better reference than the one that I kind of like had in my mind.
But no, it's Dave Ramsey's crazy. Like their takes on that show, because everyone on his program, on his show, like all the guests, not the guests, I mean all the hosts and everything have the same belief. Don't get into debt. Buy used cars if you can't afford new. Don't like all of that. And get a Roth IRA or 401k, invest.
Standard
never
boomer
borrow.
Standard boomer mentality.
I mean, you can say that.
The numbers aren't the same.
I'm not disagreeing with you. Huh?
The numbers aren't the same anymore.
No, it's not. I'm not disagreeing with you. But his point, what he tries to say is the average person should not overcomplicate their life because they can't do it. Essentially.
Oh, that makes sense. That kind of makes sense. Most people are not extremely financially literate to the level that these huge hedge funds and investors are. But
and he himself,
those rules.
Yeah, and he does the same thing. He doesn't take debt. He doesn't do any of that. They don't even own credit cards. None of his hosts hold credit cards.
That's wild.
They're like credit cards are only bad.
Are only bad.
Yeah. Like he one of the guys wrote a book on it. He goes, even if I use my credit card right, because I use my card right, it penalizes. Damn, penalizes someone else.
Mm-hmm. Oh, so he's looking at it as like as a moral thing.
As a moral thing, he's like morally it's still wrong.
That's kind of wild.
Just a bit.
That's an interesting take on that one. Well, I don't have much left to say in terms of the current news and what's going on in the world.
Nah, the world's a mess. I want to share something because I feel like Nvidia can't catch a break.
Nvidia can't catch a break. What's up with it? Well, it's in the dumps.
Trump dumped it.
Wow.
Like,
what'd you do?
Trump announces, he goes, okay, Nvidia announced that they're going to put $500 billion into the US to create chip manufacturing. Perfect. Trump goes, okay, with whatever you need to expedite, we'll expedite so you can get it up and running as soon as possible. Right? Mm-hmm. Perfect. Couple of hours later, he goes, oh, by the way, Nvidia is no longer allowed to sell H200 chips to China. And that represents 5.5 billion in revenue.
That hurts. That hurts Nvidia like a lot.
Can't catch a break. Oh, AMD, same thing happened because it affects them.
Yeah,
because they're part. But yeah, I just feel like that's can't catch a break. It was doing really good. Yeah, it wasn't doing good. It was pushing up around 111.
Yeah.
News comes out after hours, of course, and then bloop, 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 hits water. Just takes a dive.
Yeah.
Yeah, man, it's a mess.
Hopefully,
streets are dangerous.
Yeah, they'll be fine.
Long term, bro. Once we pull out of this one, new all-time highs for everyone.
Oh yeah, 100%.
Well, I got nothing left.
All right. Well, in that case, if you made it this far and you've liked the episode, please drop a like, smash that subscribe button, and share with a friend. Drop us a comment. Let us know how we're doing.
Tell Alex he's pretty.
You don't have to do that.
But it's nice to do it.
Especially if you don't think it's true.
That's true.
But it's been another great episode.
It's been another week
of your favorite crypto podcast.
Sometimes crypto.
The unscripted
crypto podcast.
Hey yo.